So allow me to welcome you again to our masterclass weekend session. This is Saturday, 22nd of July. And first we're going to take a look at the Nifty and the major sectoral indices. We'll create our view for the next week. We'll scan the weekly universe and look for opportunities which are there for the next week. And then we will go ahead and take a look at the open positions that we have from the weekly perspective, update the stop losses, decide on the stocks which we want to exit, and then finally we'll take up your doubts and questions. So to begin with, I have 4 screens on my trading view page here, wherein I'm looking at the monthly, weekly, daily, and 75. Now, all this while you would have known that weekly, daily, 75 were the three screens that I used to use, but monthly is something that I've started using from last week, primarily from the point of view of kind of looking at the TF+1 if I'm looking at a weekly trade. You would have observed that the trades that we have taken from the weekly time frame tends to be of better quality, higher quality than the daily ones, probably because of the long only nature, and that's why I have kept the monthly chart. So Nifty last week gave off on Friday, but overall from a weekly point of view, we have 4 successive move. What we had as a late runaway setup down here due to a decoy bar has led to an extension for the last 4 weeks. All-time highs have sustained well. There has not been any dearth of underlying momentum. Markets have seen good index management, decent sectoral rotation. All in all, a decent move. Yes, Friday's move was a strong one, down more than 200 points. And that's when you were expecting that the psychological 20K will get hit. And let's consider it to be met, right? I think it was shy by just 10-15 points. The Gift Nifty, however, did see exactly 20K 0.00 on its charts. You can see it. So let's assume that fine, the market has shown great strength. In terms of trend, we are in an uptrend across daily, weekly, monthly. Emphatically strong uptrend. In terms of momentum, monthly, weekly, no problem. Daily, just initial sense of slowing down. We have an M1 divergence kicking in. Not support of the M2 is still holding well. So honestly, even after that big 200 points crack on Friday, nothing much has got damaged yet. It is in fact healthy for the overall market. So the view stays bullish, but because of the fact that we have experienced a fair bit of intraday choppiness, volatility, there have been stocks which have fallen for 3-4 days, even last week, successively. I think ICICI Pru would be one of them. And then you will have stocks which have rallied exceptionally well. So we will keep a cautiously bullish view on the overall markets. In terms of levels, now on the upside, of course, psychological 20K, there is no rocket science about that. And on the downside, the base of the markets have actually increased quite a bit, which means that if we go by the previous breakout point, it was this zone that it created a resistances and then gave a breakout. Once a stock gives a breakout, it generally has a tendency to come back close to that zone for a kind of a throwback. If you remember, we had seen something like this in the Bank Nifty chart. So where does this level lie? This is around 19,500, 520. So 19,500 is the level that we can look for if Friday's move extends further next week. Okay. In terms of the ratio charts that we look at, this is the Nifty vis-a-vis the dollar index, which is very strong. It's just cooling off a little bit. This is Nifty vis-a-vis gold, which is kind of consolidating. Momentum is slowing down for this ratio, which means that the relative strength of the Nifty is slowing down vis-a-vis that of gold. So not a bad idea. If you're also a commodity trader, you can look to add some positions in your gold or gold ETF or whatever be your avenue of putting some capital into gold. The mid and small caps are holding really well. The mid cap, however, did not fall as much as the Nifty. We have you can call these kind of formations an evening star. This is the CNX mid cap daily chart. The weekly is exceptionally strong. I don't remember when I saw such a parabolic move from the CNX midcap index, but they do move really well. Monthly, it's pretty good. The breakout has sustained well. This was the first level of breakout, which did see some consolidation, and this is the next level. Again, in terms of trend, no problem. In terms of momentum, it's the daily chart which is slowing down. So the mid and small cap participation has been there. It is there. In fact, if you see, small cap index was actually up on Friday's session, and the monthly charts are eyeing its previous highs, which was close to 12K. So the broader markets are supporting. No problem in that. So until and unless these charts give us concrete evidences that, okay, there is a chance to slip down, we will not call for a contrarian view. Okay. So we don't expect anything coming in from the broader indices. Bank Nifty. Now, Bank Nifty in Friday's trade, relatively better than the Nifty, held well, created a classic doji, decent size shadows on both the sides. This is the daily time frame. Weekly exceptional gain, big move on the weekly time frame, and so far so good. This is, I think, the 5th consecutive positive monthly close. We are yet to go a week and a half, but Bank Nifty is holding really well. Again, trend wise, no problem. Momentum wise, in fact, Bank Nifty, no problem. I think the PSU banking pack will do better than the private sector banks. If you allow me, I can show you the ratio of the private sector banks vis-a-vis the PSU banks. It should be this one. Yes, there you go. If you take a look at the ratio chart of the CNX PSU bank vis-a-vis the private sector banks, it's actually giving us a breakout, this one, which means that going forward, we can expect some relative strength coming from the PSU bank vis-a-vis the private sector banks. We have seen moves coming in. In fact, in our weekly portfolio, we have added a couple of stocks from that pocket, the PSU pocket. So fingers crossed, we expect that this momentum will continue. We'll quickly take a look at CNX Finance also, because what I've done last week, I've kind of clubbed all the financial stocks along with the banking and created a big group of 20 stocks in that pocket. So we should look at CNX Finance, which has the top few banking names also, and very strong uptrend, no problem with momentum. We should keep a bullish view. Yes, it is extended. You can see the size of the weekly candle on CNX Finance as well as Bank Nifty. You will see range expansion. So we may feel that it's out of our reach a little bit. So any kind of a fresh breakout like we entered Bank of India possible, or we will wait for some kind of a pullback. So no problem with the financials. Auto. This is the CNX Auto. Now, Auto is playing a little tricky with us. We've seen a decent fall of the underlying momentum for the last, I would say, 5 to 6 trading sessions. The trend, the price has not actually followed the signal of the momentum. I'm talking about the daily charts. We did get some views over here that it might come down, and then we were looking at stocks like Maruti, M&M, but price never came down. Weekly, strong. Monthly, exceptionally strong. Weekly can offer you some RSI divergence up here, but RSI is an oscillator. At such stretched levels, offering a divergence for RSI is a but obvious natural phenomenon. We're not surprised by this. Also, our Heiken-Ash is not supportive. So what this daily slowing down of momentum was indicating to us for the last 6 trading sessions, price is actually not supporting it. In short, price is not coming down. None of the top 3-5 names are offering us any kind of breakdown. I think the last successful trade that we managed on the downside from the auto pack was the Aisha Motor short trade. After that, I don't think we have any success on the downside looking at the underlying momentum. So we don't want to rush and buy into auto because of its stretch behavior, and neither are we going to short. We are going to wait for yet another signal. What we are going to wait for is prices to slow down. The slowdown of the momentum should lead to a slowdown of price, and then we will look at 3 stocks: Tata Motors, M&M, Maruti Suzuki. These are the 3 stocks which enjoy the maximum weightage. So we'll keep a very close eye on them. Consumer durables, By the way, before I go to consumer durables, I should walk you through the auto and 500 ratio chart. Now, the reason over the last 5-6 sessions, we were little more interested that the auto momentum is slowing down, we can look for auto shorts, is because the ratio chart is also following the same indication. It's clearly telling us that over the last 2 weeks, auto, though if they have gone up, have underperformed the CNX 500. And that is a good sign if we get any shorting opportunity in auto. Now let's come to consumer durables. Breakdown, isn't it? Now, see over here also the momentum has been slipping. This is a beautiful slant divergence with our M2 indicator. We've got some 3 count RSI divergence. If you take a look at the monthly charts, it's more or less dealing with some previous highs. Over here, the weakness in price has finally come. In terms of our short-term moving averages, it did try to dip a couple of times before, but this looks like a more comforting breakdown below its average. It has broken down and stayed down. So it gives some conviction. Any kind of a counter move from here on, and you know that we have a shorting opportunity. So do keep a look at the top 6-7 names from the consumer durables, which is the stock which can follow. Heiken Ashi has also become red hot, which means it's showing bearish indication. Take a look at the ratio chart. The ratio chart is actually following for 5 weeks. For 5 weeks, the consumer durables vis-a-vis CNX 500 is underperforming, which means that if it is underperforming and if it breaks down, then there is weakness we can expect further. So this fits in really well. So consumer durables, we can look for some shorting opportunities next week. Come to energy, Reliance holding exceptionally well. OMCs we have noticed are doing pretty good. Again, strong trend across daily, weekly. Monthly, not that strong. Monthly needs to deal with this structural breakdown. It's coming back to those levels. Weekly, daily is fine. I don't see any reasons to worry apart from this obvious M1 divergence. Let the momentum slow down, let the trend reverse, then we'll think about it. Till then, keep a bullish view. Take a look at the ratio. Ratio is not that great. It's completely range bound over here. So we don't have much clarity. Energy, bullish. FMCG. Now this is, I think, a tussle between what's happening in ITC vis-a-vis Hindustan Unilever, to be precise. But if you take a look at the CNX FMCG daily chart, Thursday it gave you a breakout. ITC. Friday it slipped down. Hindustan Unilever. So an obvious question should come to our mind that is this going to turn out to be a breakout failure or not? If so, by Monday, Thursday's low should be broken. If that happens, hopefully our momentum will again start to slope down and we will start to see some short-term trend reversal. I'm drawing the bearish possibility first. And if that happens Monday, Tuesday or Wednesday, we probably can have a bearish view. Then we can look for some opportunities on the short side. If this happens, then, or else by the look of the weekly, monthly, it doesn't make sense at all to look for any kind of a contrarian short in this pocket. FMCG is bullish till the time this breakout is not proven to be a false breakout. If it turns out to be a false breakout, we might have some opportunity in our hands. IT, yet another gap down like we had noticed here, happened on Friday. That's because of Infosys. Infosys, probably our trade from the weekly time frame, which we will discuss later today evening, is going to stick to us for a long time. We had an exceptional trade there, giving us almost 9-10% in a matter of 2-3 days. But the gap down will hurt us. So it did hurt CNX IT as well. CNX IT is a gap down. But the sector has improved quite a bit. It has reacted exactly from what we can expect as perceived resistances. The monthly charts are holding exceptionally well and it's kind of range bound very clear. Now it's knocking at 31K, which is the upper border of the range. We should be looking at a breakout. We have had success in the past, Coforge, Persistent, recently I think HCL Tech, Tech Mahindra, Infosys, if we had closed a day before, would have been exceptional, but that's in the hindsight. So we've been able to capitalize this particular multi-week movement in IT. What needs to be seen is, do we get a follow-through move or not? I'm of the opinion that CNX IT may continue to show some support to the index going forward, especially when the other indices like auto and FMCG slows down. The ratio, however, is not good. Of course, it won't be good because it's been underperforming for quite some time to the overall markets. Every time it starts to find some footing, it comes down thanks to Infosys, and this time again the same story has got repeated. So it's going to stay choppy, but I think it will try to provide some strength to the market. Metal. Bullish, we've got a decent kind of a movement, especially I think we have played out Hindalco and SAIL. So far so good. Those trades are still open. But it's not a clean chart. If I show you the monthly charts, if you take a look at the largest prospective view, possible view, it's full of breakout failures. A breakout failure that you had here led to a down move. The breakdown that you had here led to a sharp reversal. The sharp reversal which led to a fresh breakout led to another down. Now this low was not broken and now it's bouncing back. So it's kind of choppy, very choppy. However, current situation, CNX metal on the weekly time frame is slowing down. It has created a decoy bar in terms of our momentum. Everything's fine. In terms of daily time frame, yes, momentum is slowing down. Yes, we've got some sell-off on Friday's trade, but predominantly it is bullish. So we will use the word cautiously bullish. If it slows down a little more, if it comes down a little more, then we will look for pullback trades. Now, important is the CNX metal with the CNX 500 ratio chart. What we are looking at over here is a prospective breakout. If this breakout comes, it means buy CNX metal, sell CNX 500, means metals possibly have the chance to outperform the market. IT had that, unless the 8% move of Infosys, if it had not happened or it was of a lesser size down move, it would have looked better. But metals is on the verge. I think this is an opportunity for the metals to prove itself, or else it will probably struggle, because the ratio on the monthly time frame is not that good. It's completely range bound, and so it has the possibility of either opening up on the downside or retracing on the upside. As of now, whatever evidence we have on our hands today evening, we will stick to a bullish view, or we will stick to a cautiously bullish view. Last two sectors, pharma, what can I say? Exceptional. This is again an exceptional move coming in from CNX Pharma. If you remember, we were looking at this prospective rising wedge in a situation where momentum was looking a little wobbly, and I had taken a couple of chances on this. One chance on the downside, it did not play out, but whatever we've taken chance on the upside with Sun Pharma, etc., have played out well. So overall pharmaceutical, what do we have the readings? Trend, no problem. Momentum, no problem. Across all time frames, beautifully placed. Heiken Ashi is also beautifully placed. So what can we say? Bullish, but it's a little scary. When you have a move like this and you have your short-term indicators reading like this, you don't want to chase. So we'll wait for better levels. And finally, real estate. Again, over here also, just like pharma, auto, you will find a parabolic move up. This parabolic move up, the last few legs of the last 4 weeks, is leading with it's coming up with an M1 divergence, slant divergence in a weekly chart, which is very, very evident on the daily chart. You'll find a clear-cut M2 divergence on our charts. But it's showing good strength. It's not breaking down. I think it's at the crux right now. I think that this particular move on the daily time frame, which is leading to some bit of a slowdown, it's too early to comment. What we generally do is we wait for the prices to give us a proper correction. When I say a proper correction, at least it moves below our short-term moving averages. The last time it happened was here, bounced back. So at least let it break below our short-term exponential moving average, and then we'll take a call. DLF, of course, will be the first candidate if it shows any kind of weakness. Now, before I move on to our portfolio stocks, the CNX real estate and 500 ratio, if you look at, is at an interesting juncture. This is the daily chart. This is the weekly chart. This is the divergence, the slant that I was talking about, which means that it is giving itself a window of opportunity to probably slip down. If this happens, then the reality index can come down. Then we can look at DLF, Godrej Properties, etc. for a short trade. So, just like the decision that we took in consumer durables, real estate can also be a prospective short. FMCG can be a prospective short. Metals, pharma, IT, we are keeping a cautiously bullish alongside the financials. Auto, we are not doing anything, but we hope that the stretched behavior of auto slows down and give us some opportunity on the downside. Overall, the view on the market is of course bullish. Important thing to see coming forward next week is Friday's range. This Friday's range opens which way, and does it sustain or not? If it opens weak and stays down and closes below Friday's low, we can easily expect 19,500. On the other hand, if we have a sharp bounce back and takes out Friday's high, then we might see a 20k on our Nifty like we saw in the Gift Nifty last week. Okay, so that's my view on the index markets and sectors. Let's now quickly update our Excel sheet of the open positions that we have, and let's rework the stop losses.